Imagine giving up on the stock market in 2008. You spent the early 2000s investing. Even though you didn't know much about stocks, you did what you were supposed to do and contributed to your retirement accounts consistently. The first few years were ugly, as the S&P 500 was down the first 3 years of the turn of the millennium. But you kept it up anyway. The annual returns of 2003 to 2007 finally turned positive, a few of them quite nicely. And as your portfolio started to get back to even, you think, this investing thing's finally starting to turn around. And then it all came crashing down. The Dow Jones Industrial Average had a negative calendar year return of nearly 34% and was a lot worse than that along the way. The S&P 500 lost more than half. I'm done, you think to yourself. My investing days are over. You sell every mutual fund you ever owned and decided to stick with cash and FDIC-insured CDs. Maybe you add a bond or two and a few bars of gold. Though 2009 and 2010 turn around nicely for Mr. Market, 2011 was nothing. You feel justified until you don't a few years later. 2012, 13, and 14 are up 13%, 30%, and 11% respectively. And cash equivalents aren't really paying you all that much. You start thinking about investing again. You almost call your financial advisor in 2015, but you never could quite pick up the phone. You're glad you didn't, because by the end of that year, the markets were off 1% from where they started. That's 1% less than the safety of my bank account, you think. It hardly pays anything, but it doesn't go negative. And then those doggone stocks were off to the races again, a return of 10% in 2016 and almost double that the following year. It's too late to get back in now. The good returns are gone. Surely this bubble is about to pop. 2018 was down as much as 20% and ended the year off 8%. The party is over, you think. Finally. Maybe not. 2019 skyrockets 29%. Is this a bubble, you wonder? What if it continues? 2020 arrives and the world changes with the COVID pandemic. The market drops hard, losing more than a third. But you have more important things to worry about than investing. By the time you can catch your breath between taking your mask on and off, months have gone by and you never bought the dip, and 2020 ends with the market up 16% higher than it was before the year began. This stock market doesn't make any sense, you think? Does the world make any sense? Another year goes by and you remain uninvested. 2021 finishes up a whopping 27%. Some financial guy posts a chart on his blog that shows what the S&P 500 has done since you started investing back at the beginning of 2000. And it looks like this chart. All you can do is shake your head and mumble under your breath. Lesson: investing in the stock market is hard. So is not investing. Get a plan and execute. Hey, if you like our content and you've enjoyed our channel, watch a bunch of the other videos. Send it to a friend, like, subscribe, share our content. We'd appreciate it.